For a closer look at what these housing numbers mean for the economy, let's bring in Stuart Hoffman, chief economist at PNC Financial Services Group. He's rated the top forecaster on housing starts, making him a Bloomberg best economist. He joins us from Pittsburgh. Stuart, welcome back to Bottom Line. Always a pleasure to have you on.
Glad to be back.
Stuart, we did mention that the Commerce Department reporting today home construction rising 7.2% in March from February, seasonally adjusted 549,000 units. And that number was more than expected, the highest number of new homes in about 6 months. But still nothing to start popping the champagne corks over?
No, your own Mike McKee covered it pretty well just there in his preview. Housing's still stuck in the basement. Had starts not gone up in March after the disastrous drop in February, the terrible weather we had, then the idea of a double dip, a renewed down leg for housing would be what we were talking about. We needed an increase sort of just to get back to ground zero, pun intended, and that's what we got. As Mike said, and as the numbers showed, there's some strength in multifamily. Apartments are doing very well, as people have been moving into apartments, particularly if they've been foreclosed on or don't want to buy a home. But single family is still very low. I think the good news is, if there is good news, we probably hit bottom. Housing's sort of gone from being a big black hole, a big negative on the economy, to being a neutral, but we're not at the point where housing is going to contribute anything to economic growth, or did contribute anything last quarter.
Well, Stuart, let's break this down by region. Starts climbed in 3 of 4 regions. There was a 32% jump in the Midwest, and they fell 3.3% in the South. What was going on?
Well, probably the harshest weather in February was, of course, in areas other than the South, so there was that much more to make up from. So 3 out of 4 census regions, 3 out of the West, the Northeast, the Midwest, not the South, showed some increase in starts. That's a little encouraging. At least it was broad-based. But as we say, there's nothing special that's going on in the South different from the rest of the country. Certainly Florida might be different from the rest of the Southeast. But I think it's a case where March we had a little more normal weather. The key is what happens, of course, over the next couple months. This is home buying, home building season. April, May, June, spring. We do think there'll be some marginal improvement in housing starts, maybe even some home sale numbers that'll come out tomorrow for existing home sales for the month of March. We think will be back up a little bit. So if you had a total wipeout in sales and starts went down in the spring, that would be a sign that the housing market's down, going down again. I do not think that's going to happen. So put housing in the neutral category, not a negative, but not yet a positive for the overall economy.
Well, Stuart, and to add to the confusion here, building permits, which are an indicator of future construction, they rose 11.2%. They hit that 5-decade low in February. Why the confusion?
Well, multifamily is very, you start an apartment building, that can be the equivalent of 50 units or something, so you get these lumpy, shall we say, big ups and downs. So multifamily is highly volatile. It went down, now it's back up. The point is the average of the last 3 to 6 to 9 months, the trend on permits, on starts, has stopped falling. But, it hasn't been able to show any improvement. We will, I think, see a little in the spring, but, not like last spring when you had the home buyer's tax credit, the last remnants of it in the spring of 2010. You actually saw some pretty good activity in the housing market a year ago. Unfortunately, I don't think we'll see that in the next 3 months.
Well, Stuart, in the minutes of their March 15th meeting, Federal Reserve policymakers said, quoting here, activity in the housing market continued to be depressed, held down by the large inventory of foreclosed or distressed properties on the market and by weak demand. How weak is the demand right now?
Well, first off, don't be surprised if you see that exact same sentence in the FOMC statement that comes out of their meeting next week. Demand is weak. You look at mortgage applications, not for refi, but for purchase. Again, they're not going down, but they failed to go up. I think a lot of would-be home buyers aren't ready to take a lot lower prices, but a lot of home sellers, a lot of home buyers, though, still feel it's a buyer's market. So what you have is you probably still need some drops in prices this spring to really bring buyers and sellers together. Right now, it's a little bit of a game of chicken. So demand is weak, but it's weak at the prices that are prevailing.
Right.
If sellers want to sell a house, they're going to have to make the buyers a better deal. Then I think you would see better demand. And of course, if we get some more job growth over the next 3 months, that'll put more people in the ability to buy a home that isn't there now.
Well, that segues nicely into my next question, because during an April 5th conference call with analysts, the president of KB Homes, Jeffrey Mesger, said that a sustained, broad-based housing recovery won't occur until we start to experience material job creation. Define material.
Well, it's his quote. I would define material.
Sure.
We've had 2 months in a row of about 200,000 jobs. I think we'll actually see that again. We'll hit the trifecta hopefully on May 6th when they announce the April numbers. So to me, material, not only from a housing, but from a economic growth in income, consumer confidence, what I like to call sort of a self-sustaining recovery, is probably 200,000 jobs a month. Now, it's not going to be each and every month, some more, some less, but an average. And that'll be in the private sector, meaning non-government jobs, because state and local governments are going to lay off. So something over 200,000 a month on average, close to 2.5 million for the year, I would call material from a housing and an overall economic perspective if we can create those jobs.
Stuart, if I might, in our last minute, I just wanted to switch gears and get your thoughts on something. Your reaction to S&P's lowering the outlook on America's AAA rating to negative yesterday. Today, the Treasury Secretary Tim Geithner sat down with my colleague Peter Cook, and he told him that, quote, absolutely, he didn't have to reassure overseas buyers of U.S. debt. What signal does this send, S&P's move yesterday, send to our friends overseas?
Well, there's a couple ways to interpret it. The most charitable way would be that S&P is sort of, a little bit of a slap across the face, maybe a mild slap across the face of our politicians and investors. Something needs to be done. S&P said their baseline is that there will be a budget deal. That was 2 out of 3, but there was always that 1 out of 3 chance we'd have no political compromise or some other maybe new downturn in the economy to worsen the fiscal situation. So I think it's interesting. The dollar actually appreciated a little bit yesterday. So and the bond market actually rallied a little. So I think that was viewed more as an encouragement, if you like, for us to get our fiscal house in order, and S&P kind of reminding us of the consequences if we don't.
Stuart Hoffman of PNC Financial joining us from Pittsburgh. Stuart, it's always a pleasure to have you on. Thanks so much.
Thank you.